Welcome everyone. My name is Chris. This is Admiral Markets, and we're going to present to you the live webinar here on Forex trading. So thanks for joining us today. And it is a live webinar. It's 7:45 a.m. London time, 14th of October, 2014. So very excited to continue. We've got about 3 weeks left in October. Before we actually look at the market though and price action, this disclaimer. This webinar is intended for a global audience. Please take into account that the information in this session therefore may not be suitable for everyone. To get the corresponding information on charting conditions and other details and whether this webinar is indeed suitable for you, please visit www.admiralmarketsglobal.com, select your country of residence and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk and it may not be suitable for all investors and traders. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for educational and informational purposes only. You can always ask for the disclaimer by sending an email to admiralmarketsglobal.com, and you can find the email address there, or, of course, you can, sorry, I got my words mixed up. You agree with this disclaimer by continuing watching this webinar. All right, thank you so much for your attention on these two disclaimers. Today's topic is Camarilla and intraday trading. So what I would like to do is use basically the Camarilla, obviously pivot point, and also pure price action, just basically a blank chart. So we'll start with the Camarilla, and then we'll move on to a blank chart, all right, and see how raw price action looks like. So that's the plan for today. We'll start with the usual pairs, the majors. But if you are, by any chance, for the first or second or third time in this webinar, let me know. And that's always useful for me so that I can give more background info. Otherwise, many of you have been probably here a couple of times or more, so you know more details already. So I don't have to explain everything from scratch. Certain topics and indicators. All right. I hope the sound is better now. Björn, is it okay? Here's the calendar. We always take a look at the calendar just to take a look what's going on, and we have CPI and the pound in an hour and 44. That's the biggie of this morning, plus the German ZEW economic sentiment. Alrighty, so let's take a look. Camarilla, I have mainly on most charts, I have it on the 15, 30-minute charts, and I have on the hourly, I have the pivot points, and in combination with Camarilla, I often, as you know, probably add moving averages. So we'll first look at this template, and after the work has been finished, I'll just take a look at a blank chart, or the other way around. We'll see. At this moment, though, look, the euro dollar is, I would say, caught in a correction. It's getting itself reeled into some consolidation. It's a typical behavior for that. All in all, though, if I look at the past momentum here still, that is clearly visible, plus a zigzag to the downside here, which stopped at the 61.8 fib, like this. Maybe I'll start with the blank chart, in fact. I'll get to the Camarilla soon, so just be patient if you're specifically waiting for that. Alrighty, please be patient. All right, as we first take a look at the blank chart here. So price stopped at all of these fibs. The 61.8 is typical for something like this. So you have a zigzag up, you have a zigzag down, and then at 61.8, and we have yesterday a zigzag up. So it looks like a typical bigger consolidation going on, and I would not be surprised to see a zigzag down and then a zigzag up, to be honest. I know it sounds maybe almost too simple, but I wouldn't be surprised. So for me, in that regard, this bottom is key. Anything that stays above that is still bullish territory for the moment regarding the intraday 1 hour chart point of view. And I would think if I look at the specific zigzag that we had yesterday, this zone in here, some refer to it as a supply and demand zone. I'm not sure if it is actually, but it's definitely a halting spot after a clear momentum up, followed by a clear momentum up. So I would expect personally price to bounce somewhere in here. If you look at the fact that we do have lower lows and higher highs and higher lows, then this could be another higher low for upside. So that's basically my expectation at the moment. A bounce anywhere in and above, ultimately above this bottom, but I don't think it will get that far. I think probably above this bottom. But this one, the red horizontal level, is, in my opinion, the key level. Anything above the red is bullish territory. But I don't expect price to get in this blue zone. I don't expect price to get that deep. But it's still bullish territory. Primarily, I would expect price to go in somewhere and bounce in that green box. And the red box is bearish territory already, in my opinion. It has everything to do with the fact that, one of the things was what I already mentioned, but the other thing is the fact that we are out of the downtrend, first of all. If you look at it like this point of view, well, at least we're out of the 4-hour downtrend, I should say. The daily is still down, to be honest, and that's fine. That sometimes happens. I mean, we could have big daily retracements. And in this case, the daily trend is certainly down, don't get me wrong, but it doesn't mean that the 4-hour and the hourly could not retrace pretty steep against this daily as well. So in the long term, I still remain bearish. That doesn't change. But in the short to intermediate, because we broke out of this trend line here, I do expect, and we bounced off of it, I do expect a zigzag like this up to the minus 618 target. I would really only change it if either, as I said, this trend line gets broken, and the bottom, and this trend line, and the bottom. And preferably also the bigger bottom eventually, but anyhow, that would be the bearishness there. So because of those things, and the fact that we do have already some divergence between these bottoms logically, I'm expecting that bigger zigzag to the minus 618 target. There's also another reason price could go up that high. That's this fib. If we consider this to be fall 1, rise 2, and a fall, we can get another rise. The 38.2 four-way 4, as it's otherwise known, is a typical spot for price to continue with the daily downtrend. So something like this seems likely to me. Now, what could cause that movement down? Maybe some fundamental news to support that as well. We had major fundamentals supporting the euro-dollar downside in these last 4 months. Was recently the FOMC was not as enthusiastic about markets' reaction to the U.S. figures and the Fed direction, or the interpretation of the Fed direction. So you see a bit of a bounce. That bounce could last. Looking at technicals, I think to the 38.2 fib and a minus 618 confluence in 129.60. Therefore, in the long run, key level, everything below 130. Why 130? Because we have, besides the fib at 129.60, we have this top at 129.97. 130 is a round number, so anything below 130 is in the long run bearish. So the up move, if it does happen from the green dot, something like that, and then down. That's what I expect. Now, how long this could take is difficult. It could take long. I'm not sure. It could move up like this, go sideways, then break down, go up a bit, break one more time down, then move up again, and it could, expand this into a pretty big consolidation, wave 4, big sideways movement. That's possible. So those are basically the bull and bear lines for me at the moment. I would be interested in going along if price makes a bit more dip, or if indeed price doesn't do that and starts to break, then it's more shorting territory. So that's basically, if I just look at it at a naked chart at this moment, that's what I would be thinking. By the way, one more thing, last but not least, the daily yesterday, pretty strong engulfing, bullish engulfing twins. So as long as price stays above yesterday's high, above yesterday's low, the other way around, sorry, then obviously I think this is just a potential retracement of yesterday's bullish candle. Weekly, by the way, the first bullish candle, if you don't consider this bullish, it was just a doji, then the first bullish candle in 13 weeks. So it does signal some turnaround maybe, or not turnaround, but let's say retracement. Okay, that's all I wanted to specifically mention. Now, if we take a look at Camarilla, how does that fit in? Let's take a look at the L3, L5, and the H3 and H5 levels. Camarilla is very far apart from each other, I think, relatively. We're still in the L3, L4 zone here. So basically L3 could be already a bounce, or the L4. Anywhere in this zone, I would be looking for a long. Probably more, for the moment, for sure close to the L4, maybe even here, but I would need to see some reaction. And if we look at, let's also add a daily pivot point. It is at a bouncing spot. It just doesn't, it isn't bouncing as we look at price. It's moving down. So the fact that there is a bouncing spot doesn't mean the price will necessarily must bounce. It could, and I'll keep an eye on probably this hourly candle. If we get some bullish engulfing twins next hour, then that could be the signal that price is indeed bouncing off the daily pivot and this L3 in my opinion. We got bullish moving averages on the 15, on the hourly, mixed on the 4-hour, bearish on the daily, of course, as we know. But also, as we know, the price could retrace up, make that retracement despite the bearish moving averages. So, in any case, the 15 and the hourly have that short-term trend already pointed to the upside. So, anywhere where price bounces here and gives me a signal, either here with a price action signal or at L4, possibly just with a direct market order right there, right then, without even the confirmation, are valid options in my opinion. Or waiting for confirmation at L4 as well, like for instance a wick on the hourly 30-minute chart, or engulfing twins, a hammer on the hourly 30-minute chart. Those things would give confirmation. And for the moment, I'm not too interested in downside. More interested in a bounce to the upside because of that, the analysis. But if we do break through L4, let's say price makes a rush down and then makes a small crawl up like this and doesn't go anywhere, and it's more looking like a bear flag, and then price starts to suddenly, boom, breakthrough like this, well, then obviously we have a lot more clues and information that we don't have now, and it would be different. It would look more bearish, to be honest. At least for an intraday fall, maybe to L5. That could happen. You never know. You never know. It all, of course, every time price and candles print, we have new, more information. So if we get a big fall and price doesn't make a rebound but just goes like flat or a bear flag and then starts to break below the bear flag, well, then it looks like we have an intraday trend that is down. So in that case, then it might be different and I might short it. But until that happens, I wouldn't be thinking about intraday shorts for the moment at least. Because I expect looking at this, I think the odds are more in favor of longs. But looking at this particular structure, despite the fact that the daily is down. All right, so that is the Camarilla basically. Camarilla could be used as a breakout level or as a bounce. I'm looking for it as a bounce, or maybe very later today if price action confirms it as a break. To the upside, we have H3. Obviously, if price then starts to bounce here and move up like this and makes some smaller bull flag and a break, well, that would be then levels to think about breakout trades above H3. That's how you can use Camarilla. 1 hour chart, nothing really new, I think, to mention. So if we're all okay, we can move on to the next pair, I think. Yep, good. Pound dollar. Let's start with the blank one again. It's not going to be that different than the euro dollar, as far as I can remember, but there could be some local differences. So let's start yet again. I'll try to make it a bit faster, and then we can take a look at the others as well, like Aussie and dollar yen, for instance, or any particular pair that you favor. Let me know. Pound dollar daily chart, definitely in downtrend too. Started later, but just like the euro, heavily entrenched in the downtrend and making lower lows and lower highs, no doubt about it. 4 hour chart, same story. In fact, despite we did have a break on the 4 hour chart of this trend line. So in that regard, there is also, as we did here, basically made a zigzag like this, down to the 50 fib, up to the minus 618 target. So what that's basically, the pound dollar doesn't look as the same as the euro, but it could make that zigzag as well, and then make a zigzag again. Or the zigzag was all of the tracement, and now price is going to make a downtrend. The same scenario basically, although upside seems more likely to me. Really, both scenarios are possible. That's why I want to keep an eye on the pound dollar bottom, this level here, the 78.6 fib. If we start to break below 160 and this 78.6 fib, then it is not the zigzag, the bullish zigzag as like the euro dollar as I expect. This is the zigzag I'm expecting for the moment, either to the minus 272 target or the minus 618. But if price doesn't bounce here and pushes through, then probably not going to happen. So that's the key line, the key bottom, right here, the red circle. Until then, we are at a bouncing spot in my opinion. This could be the first part of a zigzag. This could be a correction, and boom, another zigzag on its way. So one thing to keep an eye on, that resistance line together with the support line, and it's starting to look like a wedge, right? So we need a break of the wedge basically to have more clarity on which side price could break to. Within the wedge, the only thing I think is interesting is a potential, because this is slow correction, is maybe a bounce right here at the 61.8 or from the 78.6 fib. Other than that, the pound looks pretty similar to the euro dollar. One of the differences is last week's high didn't break, but it was bullish. Yesterday didn't have engulfing twins on the daily, so pound doesn't have the same strength. So maybe the euro pound is moving up. I don't know. We'll take a look. Yeah, it is actually. I remember. So that explains why the pound isn't as strong against the dollar as the euro, because the euro pound is moving up. So might be a bit more difficult to trade this one. But let's now move to Camarilla. And if I look at the 4-hour moving averages, it looks actually more bearish, to be honest, than bullish. We had a zigzag here, but price is already below the moving averages, below the pivots, below L3, bearish moving averages. So this is, to be honest, this is downtrend. Not even on the not only on the higher, but also on the lower time frames. So no, I wouldn't be looking for a bounce to the upside. In fact, if anything, this is actually more ripe for a short, to be honest, if I look at all this evidence and all these factors when looking at Camarilla and pivots and trends. In fact, one might wonder if we didn't break a trend line like this and already on the hourly chart break the triangle to the downside here. So there is a pretty big difference actually with the euro dollar. This one, though, as we know, pound has a big interest. I'm sorry, a big news event, CPI. So I would be maybe a bit more cautious with shorting it for the moment. It looks very appealing, so I'm thinking about it. But with the news event so close by, I think I'll probably watch. Because the euro probably rather wait. Plus the euro dollar is showing the opposite, so that is a bit contradictory here. It is pushing through the L3 and the trend line, and everything is bearish. So I might wait and see here if price can make a bit of an impulse and a bit of a bear flag like this. Give it a bit more time, basically. See how price reacts when it's breaking here. Because sometimes, especially early in a session, early in the London session, specifically with pound, dollar, it likes to make quite explosive ups and downs. I do not mind waiting for a bit more confirmation, a bit more time to pass by here before committing myself to either direction on the pound often enough. So, because sometimes you just see it at the start, a fall, and then before you know it, price moves up like this, makes a bull flag, and then continues up. I've seen it. So I'd rather wait and see if this is a break that's a bit more sustainable. So a bit cautious on the pound dollar. But that's because it's, you know, the pound news, the euro dollar is opposite side, plus to me it looks like a potential zigzag, still like the euro dollar, but a lot of bearish pressure, so too much of a mix. But if it does break below this trend line this week, it would be different though, like the euro dollar. Dollar yen is very interesting because there we go. Because of the fact that it could be at a pretty big bouncing spot. If you put a fib on this swing high, swing low, it's at the 38.2 fib. So for those that remember, maybe last week I was showing that I had a pending order here at the 38.2 fib, and price bounced right at that 106.80 and is up about 44 from that point. let's see, I don't know. You never know, of course, but it could be the turning spot for this dollar yen. 38.2 fib is quite common after you've had a pretty strong rally like this. If it's not this one, then there's a chance it could be the 50. If it's not the 50, I wouldn't consider it bullish anymore, and I would consider it to be neutral territory. Anything above 50 is bullish territory, especially above the 38.2. In the long run, at least. Obviously, we do have, on the short term, we have bearish pressure. But the 38.2 could be a game changer and could swiftly send this back into a bullish structure. For us to see that confirmation, we need price basically to break out of its bearishness on the 4-hour chart by, for instance, breaking out of this falling wedge and probably breaking above this resistance level. All right. Once price starts to break above that, we're making higher highs and higher lows, and an upswing could be back in play. So we're getting a bit of a, we're between two hard rocks, if you know what I mean, like in the sense that we have that downside pressure strongly here, but we also have a strong bouncing spot. Will the downtrend continue, or will we have a basically at continue to the upside? Yeah, it is at a resistance level. 110 is a psychological round number, but in my opinion, for the moment, at least as long as we stay above the 50 fib, as I said, the 110 is probably more like a stalling spot, a stopping spot, but not more than that, in my opinion. Why? Well, I have to bore you with a bit of a wave analysis for that, otherwise I cannot answer it. But if I see this as a wave 3, then this could be a wave 5. But this apparently wasn't wave 5 because we were breaking again to the upside. So maybe we're getting an extended wave 5, which means 5 waves in a wave 5. So if that's the case, then this was a wave 4. Sorry, let me draw that properly. This was a wave 4. This was the wave 3, right? And then before that, which we don't see on the chart, we had a wave 1 and a wave 2 here. So if this is the extended wave 5, let's count the extensions. This could be 1. This could be 2. This could be 3. We're in now, and then we get 4, and then 5 of 5. Blue 5 of green 5. So we could be in blue 3 of green 5. So yeah, it is at a resistance level, but because of this and other things, how it and the broken trend line on the monthly chart, I would expect for the moment still that follow through to higher levels. The first wave of wave 5 here was about 900 pips. The third wave so far is about 940. So maybe wave 3 is already finished here. And this is wave 4 of that green 5. But in fact, if I look closer, blue 3 might not even be finished. Because if I look at the daily, it looks like we have 1, 2, 3, 4. 4 out of that blue 3. So we have one more up to finish blue 3. One more fifth wave to finish blue 3. So why now? I don't want to bore too much with that wave, but also if you just forget that for a second and just look at trend line highs and higher lows, we broke this trend line. We broke what trend line? Let me think for a second here. That is, I want to refer to a different trend line. Oh, it was this one probably. Yeah, this one. We broke that trend line. There's obviously a lot of momentum here, and even here and here. So those reasons, therefore, are, in my opinion, sufficient to say, okay, if we break out of these trend lines with so much momentum, price could easily, indeed, use a 38.2 fib as the bouncing spot for a trend continuation to, for instance, 111, 115, eventually even, maybe even 120. But I have a clear level where, you know, I just easily abandon that idea and switch sides, no problem, if it breaks below the 50 fib and if it breaks below this top of 105.40. Because if it doesn't bounce off 105.80 and goes below 105.40, this was the previous top. If it doesn't use the previous top as support, the bulls are certainly not in control anymore. So that would be my validation level, because if that would be a logical bouncing spot. Break a resistance spot most often becomes support. If it doesn't, there's something else, something different going on. So it's exciting on the dollar yen. Let's see if it, first of all, from a trading point of view now, obviously one could have had a pending order here at the 38.2 fib. And or wait for the break of the channel, wait for the break of this top. Let it break, put a fib from here to here, and take a fib anywhere at the 61.8, the 50, the 78.6 fib for a hook back with a stop loss below this bottom. That could be the bouncing spot. Could this trade lose? Certainly, because price, as we know, could move to the 50 fib, to the Magenta 50. But there's always risk in trading. The trigger would be the break of the channel and the bounce off the 38.2 fib. The entry would be upon the hook back with a stop loss below the bottom here. And the target, well, that target could be really, it could be very aggressive, which means at 111. It could be very moderate, which means one could aim for these tops. It could, that could be 109.40-ish. One could even aim for 108 if you really want to be more, locking the profit fast. It could be even at 108.70 here. All right, so I'll leave these. This is the arrows on the chart just for a second. If you're multitasking, you can take a look. But the confirmation would be the break of this channel. All right, so we take it off now. How about the Camarilla? Price is already at the H4, interesting enough. Looks like we're trying to break, actually, if we break above H4, we're breaking above this specific trend line as well on the 15-minute chart. That could be a counter trend breakout trade. Those are usually riskier because they're going against the momentum. Momentum is still down on the 50-minute chart. And this is the very first push through. And they have the tendency to sometimes end up in a false breakout. But in this case, because price is bouncing off a pretty strong level, it could work out better than other cases, though. The other method, as I said, would be to wait for the break and wait for the pullback. I probably would rather do the second, personally. then take the immediate break here. Despite the fact that it could be a bouncing spot, breaking spot, I would probably rather wait for the break and then wait for the hook back. Alrighty, that's the dollar yen. Downside, well, not really in my opinion, unless it breaks below L3. Then it's different, obviously, because then price could be heading towards that 50 fib, as mentioned. And where's that 50 fib once again? 50 fib is at 105.75. So 105.75 is all the way here, which is still below the L5. So then things are different. If we start to break below L3, the intraday trend, the trend of the day, is then down. And we have space to hit L4 and go down to L5 and maybe touch the 50 fib there. So then things will be bearish. But as long as price stays above this bottom where I have the blue dot, I would not be looking for any bearishness on the dollar yen at the moment. All right, so that's my 2 cents here. Let's take a look at, I guess, Aussie maybe, or we can mix it up with other crosses. For instance, the Euro yen, Euro odd, as we always do, pound odd, pound yen. Let's take a look at that after this odd USD. Alrighty, we're bouncing off the H3 and L3, by the way. Let me flip it around and use the Camarilla first of all. So to keep a different viewing point here, let's see. Got triple bottom on the Aussie, on the hourly, by the way, which I know by heart happened at the 86.50. And the 86.50, what is 86.50? 86.50 is a big weekly, monthly bottom. So price struggling to break 86.50. I think it will eventually. There's too much bearish momentum not to, but it could take a while. And price, let's take a look how far price could go. 83 probably is the next target. Then after that, probably 80. Anyhow, first we need to break 86.50. And we do have a triple bottom here at 86.50. Looks a bit like an expanding wedge, like this. See that? Expanding wedges, well, price could go all the way actually to the top of that expanding wedge, then find resistance for downside. But price doesn't have to get that high, and it could respect this fib as well. And you can see price stopped at the 61.8 here. So long term is bearish, but the 4 hour is quite wacky. And this expanding wedge is not easy to trade, so that could be difficult. But if the 86.50 bottom breaks, then we're back into more bearish territory. But that doesn't seem likely today, because as you can see, the L5 is all the way at the bottom here. So probably for intraday trading, L3 short, below L3 for the bottom yet again, the fourth time, would make the most sense. The upside could happen too if price breaks above H3, to be honest. So I would be keeping an eye on both levels, because in an expanding wedge, price could easily keep pushing up like this all the way to that top of that wedge. Price is above the pivots as well. So in that regard, it has a strong 4 hour, sorry about that, had a strong 4 hour engulfing twin here, for instance. Yesterday, strong bullish candle. So in all honesty, it looks more like a bullish retracement potential today than downside, also above the pivots. If we do break below the daily pivot point, we could be retesting yesterday's low, which is the red circle, which could be a bouncing spot, which probably indeed equals exactly to the same on the Camarilla, and it nicely supports each other. A break below the daily pivot point is basically a break below the L3. and a move down to test the bottom is basically a move down to hit L5. So intraday shorts would be careful of the bottom. Could be at the bottom here, could be a swing, bounce potential there, although against trend. And above H3, intra-week, intraday long potential. Let's see. Bob mentioned a fib. Let me otherwise take off and put the blank template on. 38.2 fib. I'm not sure which time frame. Ah, yes. I think this is what Bob means. If we put a fib from the very breakout spot, because here we broke out, remember that? In September, we had a very big down push out of this triangle that lasted quite long, I think 4 months or so. And if we put a fib on that one, price could hit that 38.2 fib, if this is the fib that Bob is talking about. And an expanding wedge could explain that indeed. So that is the odd. I think Bob said previous time frame. I think he means the daily. 87.40-ish. Ah. Let's see. 87.40-ish. Hang on, folks. Okay, I got the 38, no, 87.40 is here. Okay, I got the, you're talking about this swing high. Okay. Put the 38 to at 87.40, and now I know which swing you mean. Yeah, and this hourly price is indeed respecting the fibs too. It's quite neat indeed. 38.2, 50, 61.8. It's got to be careful of the 78.6 as well. And price could basically move up to fib, bounce, move up to fib, bounce, move up to fib, bounce, move up to fib, bounce. So this could be a long area for a short corrective move up to the 78.6 with basically these bottoms here as the invalidation level. But the daily downtrend is still down. I mean, the daily trend is still down though. So that's always difficult and risky because of that. But looking at this pattern, it could be right here at the end of this correction, and we could start flying down like no tomorrow. That's possible, but then it certainly would have to break through this support level, and if we look at the Camarilla, then also it would break through the L3. So that's when I would be personally interested. Let's see, we got some other questions. Sold at 88. 88. Let's see. Good. Looks very nice. Recently, probably. Is it good right now to wait until price will touch 87.50? Yeah, 87.50 seems like a bouncing potential there. As I mentioned, this trend line and this bottom here could provide that support. So that if it does get into 87.50, would make sense to be careful of a bounce. $87.52 is the 78.6 fib. So yeah, that could be bouncing spot here for upside. Interesting. The 88 sell, I think, is what Bob is referring to as a Nenet trade from yesterday. Nice one. That was a good turning spot here at 88. Good job. It looks like it's moving nicely, and I don't know where he recommended to take profit, but looking at this particular scenario, I would say 87.50 makes sense. Oh, he has a target at 87.50. Okay. Yeah, that makes sense. That looks good. If it does break through L3, there's always a potential to re-enter if a trader wants to. You can also just keep the pips, obviously, and just say goodbye to the next trade or forget about the rest of the pips. That's probably maybe even better. But yeah, looking at the short-term trend, it looks more like a bouncing spot here for upside. So I would have nothing against taking a small risk at the green dot for the next fib target, to be honest. It's a small risk. Below the L3 needs to be the stop loss. And if it doesn't work out, then hopefully I would be able to basically capture or capitalize on the intraday short-term trend and compensate those few pips lost there. Alrighty, let's see. Daniel, confluence of 70% fib and 23.6 fib to downside. Not 100% sure. Which time frame are you talking about? I'll use the daily. Okay. Let's see, 70 fib. This is a 23.6 fib indeed. And the 4-hour chart, a 70 fib maybe from here. Not sure. Well, yeah, it definitely. I definitely think it's bearish in the long term. But the question is, how far this can last. We do have the upside is a bit risky in the sense that we are pretty close to this head and shoulders level. So that bounce to the upside is risky because this could certainly be the turning spot, in fact. Price action is bullish. But as soon as, for me, as soon as it breaks this bottom, then it's bearish. It could be bearish now, but it's still on the early side, in my opinion. But indeed, downtrend, potential head and shoulders here versus triple bottom and a big monthly bottom. So we're a bit of a tug of war here and struggling for control. And this is what you'll see often if price is stuck in between levels. It's just a fight for control. And there was one more thing I wanted to say, is that you'll see often this motion, right? You'll see often price hit the resistance, move down, hit the resistance, move down, hit resistance, move down, hit resistance, and then eventually this game is going to stop, and then the dominant side is going to win. But yes, sometimes this retracement kind of mode, correction mode, takes a lot longer than we expect. Maybe this time it doesn't take as long as I expect. Maybe this one is a short one, I don't know. But usually they take longer than expected. But price is moving fast. We'll have to see how price will respond to this bottom. We'll be curious. Let's take a look tomorrow. We'll find out. And we can see how price responded then and after that. Let's see. Daniel added fib down from 89.12. 89.12. I don't see 4-hour chart. I don't see any particular top at 89.14 and 89.12. That's the problem. Because we're looking for tops, right? 89.12. This top is at 88.90. This top is at 89.27. Maybe just write down maybe the day, the dates maybe. That's the best. So I know which top you're looking for. Let's see. Because I'm looking at these tops, and this one, but I don't see it. 89. Yeah, this level, right? Yep, true. Yeah, I don't use the 70 fib, but the 61.8 indeed stop price right there. Next target could be the 78.6 or a break. It's going to be exciting. Let's see. The AudCAD and AudYen are requests. Let's take a look at those. The AudCAD I didn't look this morning, so I really don't have anything prepared out of the top of my head. But if you just look at the Camarilla itself, the price is banging and hitting the H3 obviously, and we have bullish moving averages here on the 15. From a discretionary point of view, it looks like we're pretty close to resistance. The whole zone looks pretty corrective, and we're pretty close to that top. So no wonder price is stopping here. I guess if price does break above H3, it could go to H4. Otherwise, it looks more like a bounce spot, in fact, for more downside, which could be right here, or wait for L3 to get broken. There is bullish price action here, but if you look at the bigger sideways zone, it's right at the top. So that's why I would say it's more at a bounce spot. Probably, to be honest, I wouldn't trade it at the moment, I guess, if I look at this. But I mean, here I was looking for longs yesterday. Bob, maybe you too. I had a pending order here and here, but those didn't get filled. And I had a TP that was aimed at this level because I had a fib from here to here, and I was aiming for this minus 618. That's exactly where it stopped, in fact. So for me, the target got hit. So for me, this is kind of over, this AudCAD. The pending long didn't get filled, so and hit our target. So, you know, that's sometimes some traders do it though. They trade reversals off of targets. You can see that sometimes that works pretty nicely. I haven't done it, you know, enough to say what the results could be, but sometimes the minus 618 target and other confluences are interesting bounces against the trend, and you can see prices moving pretty nicely away from the minus 618. That's why I'd see it more as a potential bounce to the downside than anything. But for me, I'd rather stay on the sidelines. I was indeed looking for longs from here, but not anymore at this point. Let's see, AudYen. Probably missed it somehow. I'll just open a new one. All right, folks, AudYen, let's see. How would an odd yen long be at 93.89? Oh, that's where price is right now. All right, cool. Let's take a look. Well, I did look at the odd yen, to be honest, as well, so give me just a second or two to find my bearings here. It's not a pair I always look at. In fact, we broke the low here. It's quite funny. The weekly low, bearish candles, downtrend on the daily. Four-hour chart, you can put a downtrend channel connecting multiple tops like this. This could be kind of that middle line right there. Well, it's certainly always possible the price could, retrace back to the top of that channel, but it is risky because it is in a downtrend at the moment. We have bullish price action. We have higher highs and higher lows in the 4-hour, but we also have a lot of momentum in a daily downtrend. So they're not really the factors that make me, when analyzing this, be very excited about the confluence here. You are right, though, it could be a bouncing spot, but it looks very corrective. This zigzag that ended, this was the first part, and we can see the zigzag ended up hitting the -1,000 target here. It could go and make a next zigzag like that. It's possible. The yen could get a bounce too, the dollar yen, as we know, so that yen weakness could kick in, and then the odd yen could play its role as well with that odd yen upside. But let's take a look at the 15. Probably, I don't think there's enough confluence for me to go either way, simply put. But who knows? It could be. I don't want to discourage you from your training plan, but it's also kind of halfway to zone. I'm not really enthusiastic at this point, though, about this pair. It seems to be a bit of a mix that doesn't give me some interesting setup. Now, it is true that price, what you are right in is that it is getting close to a support level. So a bounce here, and then a respect at the top, and then again a bounce, and maybe some triangle even like that. When it does get close to support, there's always the chance of a bounce. So that is true, and it is getting close to that level. Trend line could also give support. So, in that regard, you are right. Price likes to retest bottoms and tops, and often enough does bounce there. Whether it will bounce enough to move all the way to a high target, that is something we don't know. It could bounce just a bit, hit the weekly again, and then move down again. Especially in the daily downtrend, that's a bit unsure. So. But, I didn't have a ton of time. I didn't look at it beforehand. So it will depend also how the dollar yen does. If it's able to, will the yen be able to weaken here against the dollar, for instance? Let's see. The other pair I wanted to take a look at was the euro odd and pound odd. Pound odd is quite funny. Let me start with the pound odd. I wanted to show you this because it's an interesting pair. It made a zigzag up corrected down to the 38.2 fib, right, and bounced strongly off of that fib. So it could be a strong bounce here, else we broke out of this trend line. So this could be a uptrend, correction, break, pullback, go. So that's something we want to keep in mind on the weekly. The daily, and I can take off this fib now, I think. The daily was in a correction, right, as we know. And if you put a fib on those corrections, you see the price made a zigzag here, bear flag, a break of the bear flag, and then a bounce off the minus 272 target. So in that regard, it's going to be interesting because price basically hit the 61.8 fib. Let's see, or if we do it this way, if we fib this part, it hit the 886 fib. However style you use, it's hitting a resistance fib. So important level is going to be this top. A break above that, we're in bullish territory for sure, in my opinion. If price manages also to break obviously above this resistance line in that case, we also had a very strong momentum here. So it would almost seem like one would expect to follow through. But often enough, I've seen pound make this spike up is actually sometimes just a retracement for more downside. And we do have a daily, a weekly trend line that has been broken and could be retraced. So price could retrace, for instance, here, could retrace back to, for instance, the 61.8 or 50 fib, like this, before bouncing up. So the reason why I like this one is because it's quite funny that it's such a mix, in my opinion, right? We have the weekly trend up, we had strong correction down, strong momentum up, but ironically enough, despite that, it almost seems more likely the price will move down despite all of that, all of those bullish items. However, before I would expect price to retest these levels, we probably would need to see price break below this bottom. So here we're in a triangle, break to the upside or break to the downside, and how will price react here? Bounce, or will it break lower? If it does break lower, because mind you, it could be a break, pullback, and go, yes, but it also could be correction, spike, and follow through like that. So if it does break through this zone here, between the 61.8 and 50 and 61.8, then it's probably going to retest this bottom on the left and going to hit the minus 272 target. So that is what I'm expecting. This is going to be very interesting to see how price reacts here, here, at the green circle, at the red circle, and at the blue circle, to have an idea what the long-term direction could be. And pound odd is an interesting pair because it does move down and up a lot of pips. In fact, it moved up 1,500 pips in about 3 weeks, I think. Let me double check. I was counting it this morning, not even 3 weeks. Yeah, 3 weeks. 3 weeks of trading, I guess 15 trading days. Almost 1,500 pips. That is exactly the amount that the euro dollar fell, and its massive downtrend would be considered massive. And it took it almost 4 months. So, you know, the pound odd is really like the pound yen and the euro odd and euro yen also. Yeah, it moves a lot. So, but the disadvantage also is, of course, that the risk is higher with regard to bigger stop losses. So that's a disadvantage. But interesting though what a massive spike this was, and interesting what kind of follow through we're going to get. I'm really curious how this one's going to play out. I have a bias that it is going to somehow break through this bottom and crash. That's my bias. I don't know why, it's a gut feeling, but it really doesn't influence me because I have a clear levels in mind, these four that I'm keeping an eye on. A break or bounce at all of these, well actually I should say break at the green ones and a break or bounce at the blue ones is what I'm looking for. Let's see, Björn is talking about Brent oil. Unfortunately, I don't have access at the moment, though. But if you are able to send a screenshot, I would gladly take a look, though. I know that you can't send a screenshot of that many time frames, but maybe the most interesting one, if you're able to make it, though, of course, the screenshot. Let's see, Euro odd. We can take a look quickly at Camarilla on the pound odd. $15-minute chart here. Yeah, basically, as I said, we're looking for a break below this bottom, right? All right, lost my bearings. 1 second. Yeah. So the break of that bottom, indeed, as I said, would be the break of L3, in fact. So the Camarilla is nicely confirming the blank template, and that would be the breakout level that I would think about then. Sorry, I'm getting confused now. Let me put back the old template here because this new one is confusing me. 1 second. Okay, yeah. Sorry, this resistance line and this support line. So let's see. Price is now bouncing indeed at this spot after retesting this bottom. Okay, let's take a look at the euro yen or pound yen, I guess, and then we'll probably wrap it up for today unless you have a question. If you have a question, let me know now. Let's see. Euro yen, sorry. Euro yen at a bottom, at a weekly bottom. Dangerous. Big downtrend though on the 4-hour. Hourly is looking like bear flag, in fact. So that looks like a shorting area, to be honest, if it breaks through L3. I know that I'm expecting dollar yen to bounce, but if it does push through L3, I can't deny it. It does look like a breakout to the downside. The only disadvantage is, obviously the 4-hour is in a downtrend. The only disadvantage of that idea is that it's at a big weekly bottom. That could provide difficulties. Pound yen, let's take a look. Well, can't deny the strong downtrend either here. Yeah, I would say a break below L3 probably. Anyone who shorted the H4 here or the Euro yen H4, that's what I did, is doing now pretty okay because that was the turning spot. But whether price will follow through is unknown. I don't know yet. It is in a downtrend channel. at this moment. But there is some divergence between these bottoms too. So will it make that downside continuation, or is it going to make a bigger retracement? It's difficult to tell at the moment. I would still be cautious with the pound news event. So not much to add, then keep an eye on L3. If you want to have the Camarilla indicator, just send me an email with in the subject saying Camarilla and a quick topic or quick email saying please send me Camarilla to this email, and I'll send it to you. Otherwise, at the top of my head, I don't know, at this point, don't see anything. Let's see. I have Brent now. Let me take a look. I don't see it here. Maybe I'll try to find it afterwards still. But next time I can open the other platform, see if it's there. All right. So gold is, by the way, breaking resistance, but it's doing that very slowly. So I'd be still a bit cautious with gold and just see how it reacts to this resistance here. It's trying to push through, not doing that so convincingly. So it could be more of a bounce spot. But so I'm just waiting and seeing here with gold. No particular ideas as yet. So thanks, folks, for joining today. We'll be back tomorrow, by the way, with strategy. Hope to see you then. That is, let's see, for strategy. That's tomorrow, same time, same place. And then in the evening, then it's going to take a look at Heikin-Ashi. And then Thursday we have the same lineup, but then with fib trading and trend lines. So wish you good trading until then, and a good day, and hopefully see you soon. Cheers, everyone.